In a very special conversation, I'm joined by Amrit Singh, who is the CFO and Director of Axis Max Life Insurance, to talk more about the insurance sector, the overall habit of Indians in terms of savings, their larger financial goals, and of course the budget as well. Amrit, thank you so much for speaking to me.
Thank you for having me here, Gauri.
Let me start first by asking you, you are in a sector, in an industry that is normally supposed to sort of run the course even as things may be up and down. That's what the perception is, that when it comes to the life insurance sector, things are largely, supposed to be the same. Is that the correct perception, or do you think the industry really needs to sort of, there are several facets of it that are not so well known?
So it's not a new industry. This industry has been in, I guess it's over 200 years old as a concept and construct. So the fundamental concept and construct will never change, but as the consumer choices, consumer object and orientations keeps changing, the nature of product forms that are selling in the industry, the nature of distribution forms that exist within the industry will go through their changes. So we do go through a series of changes, but it is sometimes induced by consumer trends, but at many times also induced by regulatory trends and overall financial incentivization that exists.
And this is a sector that sits between financial preparedness, household savings, and long-term financial future. It sort of sits in the middle of all of these aspirations and goals. Where does India fit in there in terms of the trends that are there right now? We are the fastest growing economy, but do we have the same trends in terms of our household savings, our financial preparedness?
So India is doing very well actually, and especially as Indians, when we look at relative to the world, GDP numbers continue to clock quite strongly. And India as a country has always been a country of savers. Our household savings rate has always hovered in the ranges of 20%, which is amongst the highest in most of the geographies, and which is a great thing, because our country requires long-term infrastructure development, and if the Indian customers are actually saving for the long term, it actually helps in some sense building up the nation at an overall level. There will be certain periods of some numbers coming off a little bit on the household savings, but India is a savers nation. India does require that mindset to remain so that the long-term asset creation that needs to be done happens in this particular country. I also feel in the last few years, I think the overall depth with respect to financialization that is happening in the economy is also very strong. In some sense, there is a little bit of bias happening towards savers to investors as a journey as well, which is good. It means that as affluence and awareness increase, Indian consumers' ability to understand financial products is also increasing. Insurance always, as part of the overall portfolio, plays a very important role. And insurance as a category actually channelizes this long-term savings the best among all the asset classes. We try to, what we offer to our consumers is that we are providing them a vehicle for savings towards a long-term goal. So let's say, whether it's your children's education, still in India, children's wedding expenses is a very large portion, or whether it is your retirement thinking. All of these actually, the category does a great job when it comes to channelizing and funneling some of those investments. And in the overall money pool, we still hold 17-18% of that money pool gets funneled into life insurance as a category. This product or this industry actually also offers a protection solution. Now that's some place where we can do better. We still, with respect to protection coverage, as we call it, continues to be quite low, and that's where the requisite incentivization has to be done. And finally, there is this category called the retirement category, or this fear of living too long, that you run out of your savings, is becoming equally important and equally critical as well. So yeah.
So let me first ask about the fact that India is a growing economy. We are earning much more than previous generations. The per capita income is rising. So higher incomes should ideally be translating into better financial preparedness, financial resilience, and a certain financial planning and roadmap. Is that happening?
Yes, it's happening. Now, at least as an industry participant, we can desire more, that it should happen at a faster pace, better pace. And let me kind of give you some specific examples here. Protection, pure protection, term insurance, which, a better metric to measure is that, let's say something has to happen to me, what is the quantum of money my family will kind of get
Yes.
to themselves, which in our parlance or usage of word, we call it sum assured. Now, when you see India's sum assured to GDP ratio, we stand around 25-26%. This actually is dismally low when you compare with the US or a Japan, which will be 250% plus levels. But even a country like Thailand, Malaysia, they're also sitting at 140% level.
Why is that so?
So this is fundamentally to do with the fact that, the product category, which it's a protection component. You pay something, but you won't get it back unless something has to happen. It's
Right.
an insurance, right? Now, this mindset change with respect to consumers takes a little bit of nudge and push. And I think as affluence increases, as people understand the product proposition, there is an increase in penetration of some of these elements which will happen. And we're quite positive that, as things goes by and years unfold, we should continue seeing a pickup of sum assured growth at a stronger pace. Some stats for you. The protection gap in this country is considered to be as high as 80% plus. That
Which means 80% of the households do not have any term
in some
insurance.
sense, they don't have adequate coverage. And what do I mean by adequate coverage? If something has to happen to me, at least 10 years of my household should be managed. At
Yes.
least 10.
Yeah.
So that is the kind of whatever I'm earning today, if I multiply it by 10 times, that much sum assured coverage I should have, but people don't have it. So there is a challenge of under coverage as well, which the industry kind of faces. But you go back 5-6 years back, we are much better from where we were than how we
But
are today.
I have a slightly different view on this, that some of this is also social conditioning.
Yeah.
As a society, we've laid a lot of emphasis on gold. We are the largest consumers of gold in the world, right? So
Yeah.
gold is a very important part of our financial future, right? So we believe in real assets, and I think that some of that is the reason why we don't have the kind of coverage and penetration we should have, which is desirable. But asking on the same point, which is that if we are 10% of a developed country, and if we are, let's say, about not even 50% of a smaller economy like Thailand, where do you see this growing in the next couple of years? Because I say this because you have more people joining the workforce. You have a lot more people aspiring for a better life. Unfortunately, lifespans and working life periods are also getting smaller and shorter. So where do you see this going in the next couple of years?
Firstly, at least as Axis Max Life Insurance, we are very committed to this agenda of driving sum assured growth. And one of the product category called the term insurance category, we are possibly the largest seller of that product category in this country. And we do see a big opportunity sitting with respect to increased awareness leading to buying of this particular product form, and overall sum assured is actually increasing within the economy. Actually, we are 140 crore people.
Yeah.
But if you drill it down to, let's say at the moment, who have income proofs and
Yes.
income tax filers, and you kind of come anywhere between 10 to 15 crore Indians,
Yeah.
which potentially could be the buyers today. And this number is also improving as from a economic overall upliftment of the country as years progress. The buyers of term insurance in the market is only anywhere between 10 to 12% of that 10-15 crore. I'm not even going 140 crore. So 100% there's this opportunity sitting in front of us of driving more sum assureds. And interestingly, now there is a recent trend within the sector that it's not just term insurance as a design where these sum assured components are higher. Even in the savings and the investment products that we offer, the component of sum assured is increasing. So overall, from an industry perspective, the sum assured growth is picking up. I mean, it's a decadal opportunity. It should continue growing upwards of 20% kind of levels for us to get lifted and reach some of those figures that we just spoke of other economies.
Insurance is a sector where you actually get the maximum amount of feedback on ground, right? You have agents speaking to people, devising their financial planning, and it's a very one-on-one personalized approach, which also means that this is a sector that can actually get feedback probably the best. Is there any feedback in the last couple of years that you've got from your agencies, your agents, that what is it that people are now demanding for these products to actually have greater penetration?
So, again, I will break the answer into three parts. There is a protection component, protection health component. There is the retirement component, and then I will, put everything else in the savings and investment bucket. I think very clearly on protection component, we have seen increased awareness. We actually run a survey called the India Protection Question Survey, which have been being run for now over 5-6 years. And in every progressive year, we have seen awareness getting lifted up. From the lows of 30% people just being aware of the product form, this number is now touching 70% levels in the 6th, 7th edition that we just ran through. Ownership still is a concern. So 70% people know, but only 30% own it. This has inched up. Maybe we would have wanted it to inch up better. But we are seeing a progressive trend of awareness increasing around these product forms, and then consequently, as income influence also keep rising, the ownership will also keep becoming better and better. So fairly positive and bullish about how we see the next few years kind of unfold in this particular space. The second one is retirement. As India is young, it's also growing old. And some of those stats by 2050, I think every one Indian in 5 will be above 60. And retirement as a theme, as a concept, people are actually now started to think. They do want to plan for retirement. Retirement, we run a survey again on retirement as well every year called the India Retirement Study. There, the scores are more like 48 preparedness levels out of a maximum score of 100. There, I think there is this perceived view, and people also have a good sense of reasonable understanding as well, that almost 1/3 only feel that they have enough money to last through the retirement period.
Yeah, that's a fair assessment.
There is this belief that the society in some shape and form will take care of us, and also I have someone who can come and just my kids will take care of me. That kind of a mindset still exists, but there is a growing understanding and requirement of this particular product form. And over many years, from being a pure tax saving tool, this is becoming an important conversation in the savings and retirement, all of those thematics, that retirement is a very important need for me to solve for. So yeah, I think the on the ground trends are increased awareness is actually helping us.
So going forward, to increase penetration, what would be your top 3 focus areas that you personally think need to be focused on to have that deeper penetration over the course of the next couple of years, or maybe 5 to 10 years?
Insurance penetration at an overall level.
Yeah.
I think there is a very important role of awareness, and awareness is both augmented by what the overall participants in the market, plus the efforts made in expanding distribution reach as well. So anything which enables both these elements will have a strong impact with respect to driving overall awareness of the product form, and also availability of the product form by distribution channels. And I don't mean just the offline channel, but both the online and offline channels all come together. This is a role which the market participants will have to do. This category definitely, because it's a commitment towards a long-term goal, and unfortunately consumer biases are very now and real. You got the money, you want to spend it now.
Yes.
You rather buy something, a fancy
Immediate.
iPhone, immediate gratification versus the delayed benefit these products actually offer you. So there will always be some bit of enablement role that we'll expect the government to create that nudge onto consumers for ensuring that they do think and some part of their savings towards the long-term goals that have been identified for themselves. This is also a category which is, as you said, it's not enamored by the recent trends. You gave an example, gold has run up. Some time back, crypto was doing okay.
Yeah.
Some time back, stock markets are doing okay. But this is a category where your horizons are very long.
Yeah.
And you have to have certain product assets which can last these volatility that kind of comes through. Because in our heads, it's not just the R that you should be chasing. It is the time that you're invested is far more powerful because the compounding magic is amazing. But for this, there is both a industry participation role and there is a government and regulatory role, which is nudging the consumers towards, incentivization. On protection component, the term insurance, which is a sum assured component, I think I'll say only few things. First, the younger workforce. You should understand that if you buy the product younger, it's far more affordable than you wait out actually when you start sensing the need for such a product. To that younger workforce, whether it is through awareness, whether it is through any specific nudges by their corporates, etc., if this product can be embraced early on their journeys, it will end up being very, very cheap for them.
And I think that's the big behavioral change, because it's also oxymoronic. You are young in your workforce and you are thinking about your pension plan, retirement plans. I think that's where the behavioral change really needs to be made. You mentioned about the government's role or the regulator's role in nudging this. What's the word coming in from that side? Is the regulator on the same page? What are they saying? Any feedback there?
Regulator's job is to ensure the development of the sector is done in a holistic manner, in a strong manner. And regulator has been through this journey with us for as long as the industry has been privatized. 25, 26 years of the industry being privatized. And they have played a very important role in navigating a balanced growth of the industry. It's very important to ensure that all stakeholders in the right manner. And regulator is very clear. They want to ensure that the consumers do get a strong proposition. I think from the government side, you saw some actions on GST, where the term insurance product, which was being taxed at 18% rate, has been made 0%. So it's almost instantly the product has become 18% more affordable. That action was a great action. Actually, we welcome that and we thank the government for taking some steps around that. And since that day till today, we are seeing strong growth happening on our term insurance buying by the consumers. So these are positive signs. We expect that hopefully budget should have something for us as well,
So what exactly are you looking for specifically in the budget?
I'll say three things. I think as we've been speaking, that the product category is towards a very long goal, and there is always a behavioral bias towards short term. So some incentivization, whether in the income tax structures, needs to be done. The ATC limit has been at 1.5 lakh rupees for almost 10-12 years. I think it was introduced in 2014. For 1.5 lakh rupees, possibly you could have bought, 2 scooters then. You can't even buy one now.
Yeah.
So this limit,
inflation adjusting of ATC.
Inflation adjustment of ATC is an important thing, and also ensuring that it stays, because this is long-term incentivization actually. The second, given our sum assured gaps on protection, even though the GST step is a welcome step, some nudge which can exist as a separate, let's say, category of savings, the way NPS has, health insurance has on protection as a component, term insurance as a component would be a great welcome step as well. And thirdly, we have this product called the annuity product, which actually is for the retirees, where the retirees give away us a corpus of money, and then we promise them to give them a monthly or a yearly return till the life of the individual. This component is today completely taxed actually, that income component. We at least want that the principal component should not be taxed, only the interest component
and
should be taxed.
And this impacts senior citizens.
It impacts senior citizens. Yeah. It impacts them the most. And this is the only product in the world where, it's not like a return for a fixed period. It is still you live. And products, the way it can be structured is that It could be if I have gone away, my wife keeps getting that money. So it is to the length of my entire life that I have on this planet, and it's, you know, in sense providing that retiree the dignity, especially at the old age.
But this is a recurring demand that is there, right? In terms of the taxation, double taxation of such products. I believe this is a recurring demand of the insurance sector in the industry, right? And of course, anything that means revenue implications for the government is not likely to be taken so easily. But has there been a response that has come in from the government to this recurring demand?
I mean, this, I won't say, specific response, but we have been requesting, and I think it's a very fair ask. We are not even saying that you make the entire proceed tax-free, which actually exists in some of our products under the 1010D framework. We are only requesting that for the annuity product, at least the principal component in some shape and form should be tax exempt. I'm sure, you know, as the overall preparedness for retirement becomes important and critical.
That's when this will also happen. We'll wait to find that out in the next couple of days. Thank you so much, Amrit, for taking out the time.
Thank you. Thanks a lot.